Try this again. All right, so we're live, but hold on just a second, amigos. We got to get this stream back to old Amar. Oh, thanks. Apparently I sent him the wrong link, which I could have sworn I sent him the right link. So we'll get him squared away. Thanks, Debbie. Debbie says, thank you, Josh, for what you do. Amar, too. There are people that don't understand. You got, oh, look at that puppy. Look at that puppy. All right. Dude, this is the, all right, here we go. All right. Hold on just a second, folks. We're going to get this party started. Amar is right there. There we go. All right, there we go. All right, cool. All right, so appreciate y'all signing in. Mark should be joining us shortly. Let me just text him that we sent it to him. All right, cool. So BD says, can you give some realistic numbers to plug into healthcare on Right Capital for a single is on Medicare? Yeah, the realistic. So basically Medicare, the Right Capital, oh, there goes Amar. Sweet. Cool. Hey, Amar.
How's it going, dude?
Good, man. Good, man. Great weather in Georgia. Yes, sir. We got the windows open. The dogs are outside. It's tough life, but someone's got to live it. Amar, hey, James, I could not download.
That's all right. I got it right here.
All right. Hey, you guys. I'm gonna have to go to the other room here in just a second. So let me know when you put that up there.
Yeah, I'm putting it up right now.
All right, cool. So today is gonna be the first of many discussions, everybody, on, when I say many, a couple, on insurance topics. And before you hang up and say, I'm out of here, insurance is boring. Listen, Mar, just tell them what you told me about insurance. It's a perfect explanation of insurance.
Yeah. So insurance is essentially a transfer of risk, right? Like it's, you have insurance because you don't want to take on that risk. And what insurance companies do is they take your risk and they take somebody else's risk and they pool a bunch of people's risk together and therefore get a lower amount of exposure. Right. Because there's probabilities, something may not happen. Yep. They still got your premium though. Right. So insurance is not necessarily bad. Insurance is just transferring the risk. You have to decide how much of that risk you want to transfer. Right. And you have to make that decision independently from an insurance agent because, it's in the insurance agent's best interest to get you fully insured. Right. Because then, they sell a larger policy or whatever.
Or overly insured even maybe.
Or overly insure you. And then you just have to come to an independent decision on how much insurance you should actually have. And I guess for full disclosure, Josh, are you sharing the screen by any chance?
You want me to?
Yeah, I just want to leave the disclosures up there while we're doing the intro. Is that we sell insurance. As in Client First Capital, right? Again, this disclosure is that everything's educational purposes. We're just trying to give you, good quality content and help you make some of those decisions. But we do sell Medicare insurance supplement plans. We do sell long-term care. We do sell life insurance. So that is, just making sure that's perfectly clear. On this,
not just FYI, I don't sell anything. So just FYI. But with that said, because I don't sell anything, the drawback, frankly, is that I would be, I'm not apprised to what's going on in the market the way Amar would be, because he's a licensed agent. He gets all the stuff that's coming down the pike, and there's a lot of things that are happening in the insurance world that that someone has to keep apprised of, because some of the stuff's good. No other way around that.
Yeah, I mean, again, it just depends on how much do you want to self-insure, and how much do you want to transfer the risk to somebody else? And so we're going to cover, first of all, like homeowners, auto, umbrella insurance, right? Making sure you protect the stuff that you own. Then we'll probably go into a little bit of health insurance,
Yeah.
specifically with Medicare. Then we'll talk about life insurance. There's so many bells and whistles of life insurance that we can get into. Then we'll go into a little bit of long-term care insurance and annuities. And annuities really is longevity insurance, right? Because if you get an income stream from an annuity, you can get it for the rest of your life. And that tail risk event of living a really long life, that's what it's insuring against. And so I think today we're going to just go on the highlights of these for today. And then in the subsequent weeks, maybe we'll group these, like 2 of these topics together and do a deeper dive into each one. And like, how does the actuarial work happen within, like, for example, life insurance?
Oh, yeah.
I think our plan was to pull up a couple policies so that you can see where the embedded costs are in one of these policies and stuff like that.
100%.
So,
and just that, man, that's such a good segue, Amar, because the life insurance stuff it has to be its own separate category because it's so many things that are going on in there. So let me just talk about homeowners, auto, and umbrella. These all flow together. We're just the brief thing. And one of the things I do. Yeah, go ahead.
Before we get into the homeowners piece, let's just talk insurance in general. Like, what do you have to consider, right? And then we can go into the homeowners.
100%, man. Yeah, you know. So yeah, go ahead.
So like the first thing you have to consider is like, how much of that risk, what is at risk?
Yeah.
Right. Some of us may not know how much is at risk. So I'm just going to give an example. Let's say if you have a car and it's a Honda Accord, 2002, right? If that car was parked on the side of the road and some drunk driver ran into it, nobody got hurt, but your car is totaled. You probably, you're due for a new car, right? So the amount of risk at hand is not as high as if you had a brand new car right out of the dealership, and if somebody totaled it, you probably want to get replacement value back, right, of that car, or more than replacement value, a cost of a new car, right? And so you have to identify what's at risk first. Then you define how much coverage you want. And then if there are any circumstances that benefits may not be paid out, right? So devil's in the details, right? I think there was this thing with, I think it's out your way. Like there's a flood and a lot of the insurance policies were not covering the flood because they were saying it's
Katrina. Yep.
Yeah. So like, the insurance company, it's a business, right? So they want to take in premiums and pay the least amount out, right? I mean, that's how and that's how they make profit. And so a lot of these policies, there are details in there that will say, like, they won't pay out in certain circumstances. And you want to make sure that you know those circumstances before you sign on the dotted line.
And along those lines, don't forget, it is a transfer of risk. I'm paying a premium to offload the risk to an insurance company. An insurance company is just, they're pooling premiums from people who they're not going to have to pay out. So this is where the government screws up with if you're paying a premium to transfer risk, when is the time that you want to start getting insurance? Well, you want to start getting insurance when the risk is high. All right. So if I am a healthy, 25-year-old kid and I don't smoke, not likely for me to have a heart attack or a stroke or anything like that. So the cost to protect myself to transfer the risk is going to be minimal. If I'm 400 pounds, I eat Cheetos, I drink beers, and and I have a heart condition, all that, the cost to transfer that risk is going to be very, very high. And as such, the person who, and for a consumer, the person doesn't want to pay any premium if there's limited risk for him. And at the same time, as an insurer, they don't want to cover the guy who's more at risk. So what happens with these government insurance programs is they're saying, we will cover the risk for you no matter what your likelihood of needing the insurance is. And it's just not a good system because they're saying, hey, My dad used to be in health insurance a long time ago. Well, he still is in terms of health savings accounts. Before that, the medical savings accounts. And he used to always argue this. He goes, look, he was back then 55, 60 years old, smoked like a chimney. He goes, why would I pay the same premium for health insurance as my son, who just got out of the Army, who didn't smoke, and was 28, 25 years old, something like that, in good shape? Doesn't make sense. So always remember that. People say, I don't want the insurance until my house is on fire. Well, by then the insurance company is going to provide you coverage. And I just think a lot of people mistake that insurance company is an altruistic endeavor. Like Amar said, insurance is a business, which means it won't take you for fire insurance if your house is on fire.
Yeah. And so like with a lot of these policies, like for example, long-term care.
Yes, exactly.
There's like an ideal age range where you should be serious about getting a policy, which depending on which carrier can range from like 57 to 63 to just give a kind of range. And then after that range, as you get older, it gets more expensive because the likelihood that you use those benefits go up. And so we'll talk about some of those things. And then the one last thing here is who's benefiting from these policies, right? You're transferring the risk, but who's going to benefit from this? So like in the sense of life insurance, you're no longer here. So you're not getting it for yourself. You're getting it to benefit your family. In the case of like homeowners insurance or auto insurance, I mean, those are things that you're going to, that affect you directly. And so why don't we hop right into homeowners, auto, and umbrella insurance?
All right. So this is interesting because Amar and I both worked at USAA, and USAA was, it started off as auto insurance for military officers because whenever the PCS, permanent change of station, especially going overseas, insurance companies wouldn't insure them because they couldn't chase them down if they, for premiums and whatnot. Anyway, so we're not. I don't even think we were licensed. Were we PNC licensed? I know I don't think I was. Were you, Mark?
No.
But we knew
we had business partners within USAA that we would kind of connect the two.
Harry's, they're basically giving away Tesla shares. Anyway, so but because we worked there, we had a significant knowledge base on what's called property and casualty insurance. All right. And homeowners and auto and umbrella all kind of fall under the same umbrella. All right. So just remember, my friends, homeowners, I cannot stress this enough. The first thing you've got to do is make sure you have replacement cost, not fair market value. And so what happens is hurricane goes through Tuscaloosa and it kills your house. If you only had fair market value, that's probably not the same as going to be to put a brand spanking new stick-built home. Why? Because lumber is so expensive, timber is so expensive. Hold on a second. Labor is more expensive. The whole thing. You've got to make sure you have replacement costs. And Amar, you may or may not have had the experience, but I cannot tell you how many people. I can't believe USA is giving me replacement costs. They're saying it's going to cost $500,000 to replace my home. But I just know some guy down the street replaced his home for $400,000 or something like that. What's up, girl? My daughter just came back for lunch. You don't know. You don't know how much the replacement cost is going to be. And so a lot of people will underinsure homeowners so they can save, $30 a month. I just don't think it's worth it. Anything to add to that, Amar? You ever had that experience?
Yeah. I mean, unfortunately, I've known a lot of people that have been affected by fires in California.
Yeah. Yes.
Right? And there is a big difference in fair market value and replacement costs. And at the end of the day, you're getting this insurance to protect where you're living. You gotta make sure you check the details of the policy. One of the things with homeowners is that some of the things that your homeowner's policy will not cover, an umbrella policy may pick up, right? So you want to talk about kind of how these all are interconnected?
Let's go to auto real quick. So Kim says it right. So auto insurance. So we want to make sure we have replacement costs on homeowners. All right, that's a non-starter. Now, if you don't have replacement costs and you've chosen not to, that's fine. But ignorance is not bliss. On auto insurance policy, you want to make sure the financial planning rule of thumb is 100,000 on property damage liability. All right, 100,000, 250 or 300,000 on your bodily injury per person. That's your bodily injury PP per person. So 100,000, 250 or 3 is the reason I say 250 or 3 because it depends what the insurance company says. So I always just say 3 for simplicity. So 1, 3, and then 500,000 bodily injury per accident. That's what we want to have for auto insurance. And I'm telling you, the property and damage. So if you go from 50,000 property damage liability to 100,000, that's the amount of increase in premium is minimal. To go from say 100 and 300 on bodily injury to 250 and 5 or 305, that does get a little bit pricey. But the reason for that is because you're transferring the risk. Again, I cannot stress this enough, as opposed to you being on the hook for someone who got freaking crippled for the rest of their life. Well, you've transferred that risk to the insurance company. It's a big deal, and that's why it's more expensive. The reason it's more expensive is because it's more likely to happen. Now, along those lines, an umbrella will give you liability coverage above that. So the first thing I do is when I'm talking to people financial planning, when we're going down the insurance thing, and again, I'm not a licensed agent, so I just tell people, these are the recommendations, go talk to your own guy. However, I'll say, do you have an umbrella policy? An umbrella policy goes on top of your homeowner's insurance policy, essentially, to say you have extra coverage if you're to be sued, for instance. So some kid, I don't know, the example we'd always use in this is that you have a deck and their parting like is 1999 on the deck, and the deck collapsed on one of your rental real estates. You're going to be in a world of hurt there because they're going to sue you for all you're worth simply because you did not have adequate security to make sure people didn't freaking fall off the deck. And as such, they could get whatever assets you have to some capacity. So an umbrella says, look, man, my homeowner's insurance won't cover me for that. So an umbrella will cover me. It'll give me an umbrella above my homeowner's insurance. Now, they're not going to, at least at USAA, they would not give you an umbrella unless you had 1, 3, and 5, like Kim says. So first thing I do is I say, what's your umbrella? If they have a policy, then I'm pretty comfortable that they already have the upper limits to get an umbrella policy. Now, I want to be clear that a lot of people get an umbrella and they'll say, I have an umbrella. And, the rule of thumb would be in financial planning, you want an umbrella policy to the extent of your net worth. All right. I challenge that to some degree. And the reason is, if you look at O.J. Simpson, all right, he got sued civilly, but his pension's free. All right. So you can't go after your own retirement assets and you can't go after your primary residence. So if you were to get sued, they can't go, again, they can go after whatever they want, but whether or not they actually get that from you, it's not likely to happen. So remember, retirement assets and your primary residence are free from lawsuits by and large. And so when I say get an umbrella to the extent of your net worth, well, if you got $1 million on a home and $1 million in an IRA, and I don't know if you need to have those $2 million covered. I'll leave that for you and your agent. But just remember, an umbrella is above your homeowner. So the first thing you got to make sure is that your homeowners is sufficient enough for the insurance company to give you an umbrella, because they're not going to give it away for free. Anything you want to add to that, Amar, on umbrellas?
I think that was good. And again, this is just like high level, and then we'll show some examples and go a little bit deeper on some of these.
Yeah, well, this stuff right here, you definitely want to talk to a licensed person to go into, because that's this is an issue in property and casualty that look, some of these guys, like I know a lady named Rita back in USA, man, she knew this stuff. I mean, she could dream property and casualty. And I'm like, oh, I didn't know that. I didn't know that. It's nuts. So Kim says, Jill says, let me go here real quick. Dwelling replacement costs, is there a standard percentage? I think it's dwelling. So Jennifer, I don't know what the standard percentage is, but we want to make sure they put your house. When you're done on a hurricane or a Tuscaloosa tornado, you want to be able to go back to your house as if it never, as if it never happened. There's a commercial that says as if it never happened. That's what we want to make sure happens for sure. And then Jill says right on, you usually have to have 1, 3, and 5 in order to get an umbrella. That's 100% correct, Jill, for sure. Remember though, an umbrella in of itself, what I used to have an umbrella. I still think I can't remember. But anyway, at USA, one of the reasons you get the umbrella is because the insurance company will have they're going to have a legal team to protect you, essentially. So that way you don't have to find an attorney. Because remember, if you have an umbrella, you're not at risk. It's the insurance company that is. So the insurance company is going to get some of these freaking, crazy lawyers that are going to, just beat down people to make sure that they don't give away the insurance company's assets. So that's one of the benefits of an umbrella, is basically cheap legal protection, if you will. Let's just go through some of these here real quick, Mar. If you get an umbrella policy on your home, can you also use that to help cover any car account risk? Yeah, I think they all flow together, Kim. So the umbrella is covering both of those things. But again, each policy is different. Anything you want to add to that, Amar?
So first you would max out your auto policy, and then it would touch into the umbrella if you needed that overlap.
Yeah, 100%. And and frankly, auto accidents happen, and people are why every time we turn on the news, which I don't know why my wife does because it drives her up the wall, but she turns on the news, 2 commercials, pharmaceuticals and freaking ambulance chasers. It's crazy all the time. Pharmaceuticals and ambulance chasers. I wonder if they have something in common there. And then auto insurance companies. It's nuts.
Yeah, even with all this automation that people are saying with self-driving cars, you're still going to have like hailstorms. You're still going to have, insurance is not going away. I mean, even the I guess the rate of human error will go down, but accidents will still happen.
Because even a machine doesn't know if he's driving on black ice or not. You know what I'm saying? That's the thing. And real quick, just I was going to say, so just real quick, they can't get your IRA, but remember, your children's beneficiary IRA is now subject to lawsuits as of 2014. So even though it's a retirement account, if it's an inherited IRA or if you own one, that is still subject to be seized in a lawsuit. Just keep that in mind. David says only 13. No, we got 64 people on right now, Dave. We got. Yeah, so you're not one of only 13. You're just watching on probably the Josh Scanlon channel as opposed to one of the others there. All right.
Or my channel.
What's that?
Or probably on Client First Capital side, right?
Yeah, don't forget to subscribe to Amar's Client First Capital Learning on YouTube. There are so many frivolous suits that it goes, I know all about it, and the attorneys write letters for $300, $400 an hour. 100% right. All right, so let's go forward, Amar.
Let's go, next one. All right, life insurance, right? So basically in the life insurance world, there's just 2 types of life insurance, right? I know there's thousands of products, but fundamentally there's either a term policy or a permanent policy. In the term policy, which is lower cost because your 100% of your premiums are going to the cost of insurance. In a permanent insurance policy, you're paying more than the cost of insurance because there's some that's going to fees, some that's going to investments, and it is for as long as you pay premiums, there's like a no lapse guarantee amount that you have to pay. As long as you're making those payments, then you're going to have that for the rest of your life, hence permanent. Term is kind of more like renting because that cost of insurance is only for a specific period of time. So typically, and we're going to go, I think, when we do the deep dives in this.
Yeah. Let's save this one for a big deep dive because there's a lot going on.
I think 90% of the people would probably benefit from term life insurance policy, and then maybe 10% of the people would need some permanent life insurance policy, just as a framework, right? And some of the reasons that actually we'll just do it in the deep dive. I think. Yeah,
I agree with that.
Show examples.
That's a big one right there for sure.
Yeah. The anything that you want to add, Josh, to this?
Well, just don't a lot of here's my man Cato, and I think it's unfortunate that people discount permanent life insurance just right out the gate. I wish they would not do that, and we'll look. We'll get into it. Generally speaking, not generally speaking, my preference is always term if you need it, if you even need it at all, but not always. And there's situation dictates for everything in financial planning. And I think Dave Ramsey says whole life is a scam. No, it's not. It's just that's stupid. It's not. But if it's not correctly done, it won't lead to good results. And same thing goes with term, by the way. try leaving your work and using your group coverage from life insurance from your employer as a private term policy. See how freaking quickly that premium goes up. So it's
and when you leave a work policy and you try to convert it to a term, they give you the standard rate. They don't give you what you're actually at. So if you're a healthy person, you're going to be paying more premiums there. And then 99% of term policies never pay out. So,
but we'll dive.
It is what it is. We'll get into more details around this and
keep going.
And we'll kind of answer some of those questions when we get there. The next one is long-term care. Now, long-term care.
Remember, Amar does sell this. So, the reason I say it is because if you're interested in long-term care, why not freaking contact him? He gets paid to sell it, but you know that going in, you're like, I'm looking for long-term care. I want to talk to somebody I know they're not going to rook me. Well, there's a guy. Anyway, and I'm not saying that as a, what's the word? I can't give you a testimonial
or endorsement. Yeah.
That's not endorsement. I do not endorse Amar to talk long-term care.
So long-term care, what I was going to say with that is that there's activities of daily living. There's actually six of them, like brushing your teeth, putting your clothes on, getting out of bed, walking, taking a shower, and using the toilet. So if you can't do 2 out of 6 of those, that triggers a long-term care event in which a policy will pay out. Now, let's just look at the history for long-term care. There used to be, I think, like 23, 24 different companies offering long-term care. I think now we're down to 2 or 3 that will offer it as a standalone policy. So what's happened is that the actuaries have totally mispriced long-term care insurance. Like, it's ridiculously how bad they've mispriced it. Part of it is advancements in healthcare. Right now, if you're 65 and older, the probability of longevity has gone up because now you could have had 1 chronic illness and you would have needed long-term care. Now you can have 2 to 3 chronic illnesses and still not need long-term care because of longevity or health improvements in the healthcare industry. So basically, they got enough drugs to keep you alive and keep you mobile that you won't qualify to make a claim on a long-term care policy. And so a couple of things that have shifted is that these policies have now become riders within annuities, which has pros and cons, but we're going to do a deeper dive into that later. But what I wanted to say is that, as you grow older and you don't die, you tend to need more help. Yeah. And the idea is, how are you going to get that help, right? Is it going to be from family? Is it going to be from nieces, nephews, children? Or is it going to be a paid help where you pay somebody? And so we're going to look at all those different options. So when we do financial planning, we automatically build in a long-term care cost for the last 3 years. Oh, it's 5 years for females and 3 years for males.
Oh, you do?
Yeah, because we want to make sure.
I don't, but that's interesting. Okay, good. Yeah. Good to know.
So when we do planning, I think there's 3 things that we do typically that may be different, maybe even different than Josh and I. Just when you first retire, typically 20 to 30% of your essential expenses will increase because every day is Saturday, right? So you tend to spend more right out of the gate, but that spending goes down, right? Nobody really talks about you're going to be spending less on the once you find a schedule or get into a routine, your spending typically tends to go down. And then at the last part of life, your spending may increase due to long-term care costs, due to wanting to give money to your children, grandchildren, etc. So gifting strategies tend to go up towards the end of life. And so those are 2 things that we cover. And then we also cover like a margin of safety. For most people, they typically feel better when they know they have X amount in the bank, right? So what is that margin of safety that you want to have? So not to diverge too much into this, but so sometimes you can self-insure for long-term care needs and pay somebody, right, to cover that cost. That may be cheaper than actually having long-term care insurance, depending on when you get it. The actuaries haven't priced this policy correctly, and therefore you've seen 20, let's just call it 20 companies out there consolidate down to 3 companies that offer it. Yeah. And all those 3 companies and all those older policies have had rate increases, almost at some point double, if you will, for the same amount of coverage. And then there's the evolution of hybrid products. Yeah, and then we'll
dive deep into hybrid products. I've done videos on it because I'm actually somewhat of a fan of them. And I used to sell some back in my brokerage days. And you do some hybrid, or could you do hybrid products? Okay, sweet. And don't discount long-term care. I have it, just FYI. So, in fact, I have whole life as well for 8 whole life policies, 2 on each kid. But I also have long-term care. Now I'm a conservative guy, right? And the reason I have long-term care is because I have a wife and 4 kids and a big fat monstrosity mortgage here. And if I were to die, or not die, well, I guess dying is life insurance. That's easy. But if I were to have a need, and a good percentage of people who have assisted living and long-term care needs are under the age of 65. So there is a risk, and I want to transfer that risk. And for me, I bought through the Knights of Columbus, and like Amar says, I have the GPO, the guaranteed payout option. I can't remember what it is, but anyway, so every 3 years, I think I get a thing from the letter from the Knights of Columbus that says, "Hey, do you want to increase your coverage amount?" And sometimes I say yes, sometimes I say no, and for extra premium, but I do have long-term care. Do most people need it? I don't know. It depends on the situation. It's always situational. That's the thing, man. Don't just say, "Oh, I heard somebody say I need it." Well, be careful. Or I heard somebody say I don't need it. Just what is happening for you, for sure.
And I want to chime in on just like a personal experience. So my parents have long-term care because I'm a financial advisor and want to transfer that risk. And I'm at my peak working years that I'm not going to have the time or the capacity, even if I wanted to be 100% around my parents to help out. And my dad got a hip replacement surgery. And when he got his first hip replacement surgery, he had a blood clot. Or no, this is a second hip replacement. When he got his second hip replacement surgery, the second hip, he ended up getting a blood clot that he ended up getting a stroke from, right? And he wasn't able to come straight home, right? And this is when he was 60. And so because of going to a rehab center, and then the rehab center, everything, the process dragged out longer. Yeah. But once we saw my dad at the rehab center, I called the long-term care policy and said, "Look, my dad's been in the hospital."
Oops. What was that? Oh, sorry, Mar. I thought I was clicking mute. Can you hear me?
Yep.
Okay. Keep going.
So what I was trying to say there is that my parents wouldn't pay for a ramp to put into the front door. They wouldn't do certain things. But since they have this policy, the policy coordinator came in and said, "Hey, you need this, this, and this," and it paid for that stuff to be done, which is really, really cool. So
we'll definitely dive deep.
We'll cover that. So the last one here, and we've already talked a little bit about it, but it's annuities.
They're scams, Amar. They're scams.
Yeah, and so for annuity piece, people say annuities are scams, yet Congress keeps offering or creating new laws to make annuities a better product for people that have saved more. One of the ones that have happened in recent years is the QLAC, which is a qualified longevity annuity contract. Essentially, you take a chunk of your money and you say, "I'm not going to pay RMDs on this money till 10 years later." So you can defer 10 years worth of RMDs in some of these QLACs and have it transferred to be later in life. Now the withdrawal is going to be more.
That's my boy. Was Patriot, Pat's Patriot. We're in quarantine hotel here because they had contract tracing. Some kid at school came down with COVID, so we're in quarantine hotel.
And so basically you can prevent RMDs now, and then you'll have a larger RMD later, but you'll probably need more money later if you have a long-term care event, or if you have longevity, or you may be in a lower tax bracket because you spent down more of your other assets, right, during that time period. The one big thing to consider with longevity contracts within annuities is that most of them are like fixed annuities. And so you're going to be fixed at a lower rate than, if you're invested in the market and took on that risk. So most of the times these make more sense for people that have a lower risk tolerance, right? Yeah. That they don't want to have that money at risk anyways. Why don't I defer it and spend down more of other assets and use this later in life?
Let me throw on the annuity. I could care less what Congress does. We know why Congress added it to it tomorrow, because the insurance lobby is big and they got lots of money lots of dollar bills to get that program started in 401k plans and whatnot. So they can all kiss my big fat behind. But with that said, having more options is a good thing. I mean, again, having the ability inside a retirement plan to do a QLAC or an IRA, or to have a guaranteed income stream, the ability is fine. But in of itself, that doesn't mean annuities are neither good nor bad. It just means they are kind of like a firearm. They don't live. They're not good or bad. They just exist. They're inanimate objects. And that's why I'd same thing with all these people. Annuities are bad or annuities are good. Life insurance is bad or life insurance is good. It's neither. It carries no value at all other than the value that you as the individual place in it because of whatever you're trying to accomplish. It drives me up the wall. I'm sitting there thinking, when we start saying this is bad, well, how do you know? And that's when it comes to financial planning. I want to read something to you here. This has nothing to do with you, Mar, but this is where you got to do financial planning, because right here. So people say term is bad. Well, here's Kim. Her son, I think it was her son. Yeah, her son became uninsurable at the age of 38 because of brain tumors. So term, the minute that term is gone, if it might not be gone already, if he doesn't have convertibility, he'll never be able to get insurance again. And that doesn't mean permanent insurance is good or bad. It just means there's more to the story. And I used to work with a guy, my man Rich, and he was a Iraq War veteran. And don't hold him against him, but he went to West Point, so he's not that bright. But when he went to Iraq, he got chemicals in his lung, one of his lungs. And he couldn't get insurance, man. He couldn't get insurance, life insurance after that, because he was uninsurable. And he's a Catholic in Louisiana, so he's putting out kids. His way better half is putting out kids like freaking Mars sneezes. And it's crazy because actually, do you get allergies in San Diego? Is there allergies or no? Oh,
not really.
That's fantastic.
But, I mean, it is picking up like the last few years. I think like I see more people with allergies, but typically,
well, that's climate change right there. Human-caused climate change. But anyway, point being is just, oh man, you got to understand the ins and outs and just be careful there. So let's read through some comments. Unless you have anything you add any more on this?
No, I was just gonna say that the big thing that I want people to take away from this, right, is when we go back to I believe it was this slide.
Oh, okay, you got it. Yeah. Finding the right insurance policy. Oh,
yeah. So there's products for a reason, right? You got to make sure that it's appropriate for your situation, and you have to be independent from the person that's telling you need that product, right?
Exactly.
And these are the questions that you need to consider. How much risk do you want to take on? If the probability is low, but the pain point is high, the impact is high, maybe that's something you want to insure. And if it's the opposite, maybe it's something that you don't want to insure because the impact is not that big. So only you can decide this. And I always say that when you're trying to figure these things out, you need to get yourself a range, kind of like a field goal post, right? Like this is the minimum that I need, this is the maximum, and somewhere in between is where you should feel comfortable.
100%.
So why don't we go through the comments?
And if you all have questions, I think Amara's got a dead stop, and we can hang on after that for a little bit. But all right, so we got Kim says she loves the topic. Her dad was a district manager for Farmers Right On. Jeremy says he's going to hire me for long-term care. I'm going to need you to take care of my daily essential needs. That's called a pillow, if that makes sense. You know what I'm saying? A pillow. Women do pay more premiums for long-term care. And the reason for that, Gary, is they live longer. But always look at, and I learned this from my man, Pete Molnar, who's one of the best presenters I've ever seen in my life. And he actually used to fly helicopters in the Air Force, so we won't hold that against him either. But he always used to say long-term care is for caring, not curing. So long-term care is we're going to care for you, Grandma. We're not going to cure you. So you're going to be in here for the longevity. And I always thought that was a great way to look at it, caring versus curing. And more women survive their men. And I always, Amar and his better half, I say, basically, if Amar is my clients, to say, Amar, we're going to kill you off, and you're beautiful, we'll survive you. In the interim, while you need long-term care, she'll wipe your butt and change your diapers. But then what happens to her once you're gone, which will most likely be the case. So Kim says she agrees with Amar, so I'm going to have to ban Kim right now. More drugs is 100%, Kim. More drugs, living longer. Yeah, but living longer is not quality of life completely.
And there's one thing that I would say with this that Kim's hitting on here is that there's a difference between lifespan and health span, right?
Good point.
And like if you were to graph those two, you would want that curve to look flat as long as possible, and then all of a sudden go down, right? Yeah. So that way you're living healthy as long as you can.
Absolutely. Yeah.
And then all of a sudden,
Gary, right on. Gary, buy long-term care and wife together. John Hancock, they used to have a share thing, which is
used to. Yeah.
They don't anymore?
Nope.
Really? Oh man. Nope.
What they used to have is this thing called pooled benefit, meaning that like if you have a husband and wife that got a policy, and let's just say the husband passed away, the husband's benefit amount would transition to the wife, and so you would have a bigger pool for the wife. So typically what people would do is they would buy smaller pools, right? Because one spouse would help take care of the other spouse. And then when that spouse passed away, then the surviving spouse would actually have the policy that they need. That doesn't work anymore.
Really?
Yeah.
See it? That's everybody's going to the old hybrid policies, man. That's all there is to it. It's nuts. Jill has had Mutual of Omaha since 2012, and premium has not gone up a penny. Yeah, some of these older policies. In fact, there used to be something called Penn Treaty. I remember I had a bunch of clients that had Penn Treaty long-term care policies, and Penn Treaty is no longer. It's just kind of funny because it's not funny, but people say I got Penn Treaty, 1994. I'm like, Penn Treaty. Just like Amar said, they did not underwrite correctly, and as such, they're no longer in existence. I'm not saying about Mutual of Omaha. I'm not saying that, but this is the exception by far and away, not the rule right there. So
let's just look at like what happened to Genworth, right? Genworth had a lot of risk on their books, right? With long-term care, they raised premiums.
But real quick, Amar, their sales pitch used to be they had never raised premiums in their 25 years. This is back in the early 2000s when I was a broker. In their 25 years of underwriting long-term care, they had never raised premiums. That was a sales pitch they had. They never said they never would, but the insinuation was they never would. You know what I'm saying? It's crazy.
And then they sold the whole business to a Chinese investment firm because they didn't want the negative press of having to raise premiums multiple times, right? So like these policies, the underwriting, just like mortgages, right? You get a mortgage with one company, and then like 10 months later, you find out it's with another company, and then another company, and another company. The same thing is happening with these pools of risk. And that's why these hybrid policies have become, I guess, more popular.
It's really the only way to go. I mean, at this day and age, you don't know what do you really want friggin' the commie China to back your mom in a nursing home? I mean, I guarantee the commie's like, come over here and sue us if we don't pay your claim. I'm going to get Joe Biden to do it. Yeah, Joe Biden's like, hey, I agree with the commies. Let's see. Very interesting. Right on, James. I have for long-term care, I have $250,000 invested in a Vanguard fund. Yeah, that's self-insuring.
That's self-insurance, right? And then just make sure that you have it somewhere that in your family knows that if something happens to you, you want them to spend down that money.
Yes,
for your care, because a lot of my clients, the average age is 73. Their parents, didn't spend a dime, and so that mindset of spending money for care sometimes is a hurdle in itself.
100%. You do have to go through medical underwriting, and it's different than underwriting for life insurance. I remember when I got it, they're looking at your brain, to see if you have Alzheimer's or indicative of having Alzheimer's. They ask you all these weird questions. They say, hey, what did I ask you about a purple friggin' dinosaur? You're like, it's weird, man. I don't know if they still do that, but I'm sure they do.
Yeah. And some of the hybrid policies, because you're partially self-insuring, the questions are not as intense.
100%.
Right?
Yeah, that's
and think about it. Long-term care is a risk of living, and
too long.
It's a risk of death, right?
Yeah.
So it's like the opposite things there.
Yeah. So long-term care is a risk of living too long. Life insurance is the risk of dying or dying too soon, essentially. Change your diet, change your life, 100%, man.
Actually, one of the things that's funny, Bradley, is they say grip strength is the biggest indicator of longevity.
Really?
Yeah.
I used to have
one of these things. I'm working on my grip right here, Josh.
I used to have some just
like 103.
I have my rotator cuff. Yeah, I got this right here. So you're supposed to squeeze.
Hey,
it.
you got the same one.
Oh yeah, look at that.
It's different.
We're brothers from another mother.
Oh, so cute.
James says we're two of the most honest and straightforward guys. Thanks. James is our granddad. So Amar and I are long lost brothers from another mother, and James our granddad. Thanks, James. Dan's in the house. Old school Patriots. Thank you. You might drop dead tomorrow. Okay, thanks, Dan. He said that during the discussion on life insurance, but I thought life insurance from your work is not portable. No, a lot of them are, Kim. It's just incredibly expensive. It's just not. It's tough unless you're not insurable. Life insurance from your work is awful hard to make the numbers crunch. In fact, someone should write a chapter on that in a book. Oh, I did. I wrote a chapter on that in my book. And the chapter is called, let's see if I can't find it, shall we? It's called Don't Rely on Your Employer for Life Insurance. And I use the example with your old buddy Josh here. Let's see. My thought was to set aside a 5 years cost of nursing home coverage. Then if needed, have the buffer to transfer other in. As long as there's a plan, man. As long as there's a plan. Is the existing conditions with insurance conundrum universal around the planet? I'm not sure what he's saying.
So I think what Riley's asking here is like, are all insurance companies trying to weed people out across the world? And I think, because it's a business, right? It's like they want to take the least amount of risk and get the highest premium, right? So they get premiums and then they have to pay out on these policies. They want to make those odds in their favor.
Let's see. We got I have New York Life, have inflation increases. Okay. Yeah. That's the thing. That's the thing. What these guys who say insurance is a scam, they don't recognize there is something called peace of mind that has a value. You can't quantify it, but there's a value to having peace of mind. And it's just, you can't economically decipher how much that is. You can't. And as such, for these freaking pointy head academics like, and like we even go back to a hybrid. A hybrid's, there are two things going on. One of you die and one of you living too long. And inherently that's going to be inefficient because you're having two competing entities under one policy. Okay, well, freaking hell's bells, man. It's inefficient. But at least I know in a hybrid, I have some long-term care, I have some life insurance, and I also have access to my money should I need. Is it the most efficient thing? No. Does it work? Yeah. So drives me up the wall. It's kind of like the whole thing with the efficient market theory, efficient market hypothesis, Amar, and all that. It's like, it's just pointy head crap that's not realistic at all. Sue's got long-term term life to use for long-term care. Right on. Right here, my concern, I agree 100%. So Kevin, I think, Keith, something like that. He says his concern, Amar, with long-term care is they could price you out of it as you get older and older, i.e., as you get more closer to needed it, they're going to say it's more and more expensive.
Which is true. But I would also say, have you looked at cost of care? In fact, I would challenge everybody, go to a Medicaid facility and go to a regular long-term care facility and then go to like a premium long-term care.
Yes, 100%.
if you visit the three, you're just going to be mind boggled by the quality, number one, but also the cost, right? In fact, I have a client right now where one of the spouses is using, they're in a facility, unfortunately, and they're spending close to $8,000 a month for round the clock care for their spouse. I mean, that's a large drain on our portfolio, right? So one of the things that we're going to cover in our deep dive is, let's just say the premium is $5,000 a year for one of these policies. If you have a portfolio that's large enough, can it sustain that $5,000 extra withdrawal versus you needing care? How much would deplete your portfolio? So that is something to consider as well, right? So like the trade-off between self-insuring and paying the premiums.
But I also want to talk about they can't just raise the premium on you individually. It's part of a group. So the state regulates. Say again.
They have to raise premium on the whole class of that product, and on top of that, the state insurance commissioner needs to approve that cost.
Yeah, so it's not, they're not just going to pick on Kevin McNitt here and say, "Hey, Kevin, we found that you're closer and closer. We're gonna raise the premiums on it." It doesn't work like that. So there is some comforting knowing that the state insurance commissioner can say no, and then B, there is a class of people as a whole that you're part of, which makes it a lot more friendlier to not being priced out. You still could be priced out, but let's see, 10,000 a month for person I knew in long-term care. Yeah. I was going to say, you're in a Medicaid facility if you walk in and it smells like poop. I'm telling you, man, the smells of the Medicaid facility is not what you want grandma to be, or even your mom to be in. I know she probably doesn't know who she is anymore, but that's not a pleasant thing. It's just not. You go to a Medicaid facility, and I'm not saying they're all like that, but money gives you privileges. That's a fact. And the privileges you have to pay $10,000 a month is that at least the smell probably will be at bay. Omaha Premium has, all right, right on.
I think there's a cost of living rider or like an inflation adjustment, like an automatic inflation adjustment. Now, when we do talk about long-term care, the one thing I would say is that there's two types of inflations, right? There's simple inflation and compounding inflation. And we'll talk about the differences between those two.
Kim says, well, Mar, talk with us about insurance long-term care, even though we don't have 500,000 liquid assets.
Yeah.
100%, because
we're here to help.
And I don't like, because the idea is you're too poor for long-term care. Well, the insinuation then is you're going to go on Medicaid. And I'm not sure that's what we want. I tell you, Medicaid facilities, I mean, if we can avoid Medicaid, let's try to avoid Medicaid is where I'm going with that. So even if you only have 500,000, but let's just say you only had 500,000, like, man, 5,000 a year for a premium, that's 1% of my liquid assets. That still could be money well spent. It really could. And then they got these.
And only you can decide that, right? Like none of us can decide that. You have to come to that conclusion.
Home care is getting more and more popular. That's what my mom has right now. She's got a lady 24/7 that come into her home, 3 shifts at 8 hours a pop. And I can't remember off the top of my head, I can't remember what the cost is, but I want to say it's like $15 an hour or something like that. Maybe it's less because she's in the Shenandoah Valley. But anyway, it ain't cheap, man. It ain't cheap, that's for sure. But she's paying for it. My roommates would love wearing some kind of party hat and beads by the long-term care, man. Here's Carolyn Cummings. Military has aid and assistance, 100% right. I worked at USAA for many moons, and it wasn't until a friend of mine who works still at USAA, and I'm trying to recruit her to come over here. For the love of me, I wish this woman would, because she's one of the best financial planners out there. She used to be a CPA, and freaking she'll knock the socks out of me and Amar in 2 seconds flat. Anyway, she told me about aid and assistance. Her mom had that. I said, what the hell is aid and assistance? Are you familiar with aid and assistance, Amar?
That's part of the veterans benefits, right? You can get into care facility. So here we have Air Force Village is the closest one to Southern California, which is in Riverside.
Yes, this live stream will be saved for later watching, Jeremy, and you should watch it at least in the background, and let the ads play so I can get that sweet, sweet YouTube money. Do I have insurance on my dogs? No, I refuse to do that. I can't. And I'm going to shower them with love. And if they need a thing with insurance, well, they've had a good life living with their old buddy Josh. That's for sure. Bring skilled care into your home. Exactly right. Government run. Yeah, of course. We have a lot of Filipino care homes here in Kern County. The care is great. Yeah, man. I bet. And if there's anything Filipinos know how to do, which is cook, right? Oh my goodness. I got a lot of people married to Filipino women. I say, how do you keep fit with those freaking ladies cooking for you? Because man alive. Oh. Mar, you ever had barbecue Korean barbecue?
No.
Dude, what the hell, man? Yeah, aid assistance is actually a program. It's not VA. It's literally a program. We might dive. I got a video. I think I got 2 videos on aid and assistance from probably 2.5 years ago. It's not part. It's different from the VA. It's part of Veterans Assistance Program. It's interesting actually. I didn't know about it until my friend told me about it with her mom. We also have home health companies that provide. Yep. So just you got to look up aid and assistance. I would start with the Army. Look at my YouTube channel. I got a thing on aid and assistance. Just look up YouTube on my own. It's on aid and assistance. Off the top of my head, there's a wonderful resource I forgot. All right, so Amar's got to drop dead. Amar, anything last thing to say?
No, just reach out to us. You can connect with our YouTube channel or go to our website. And if you have questions, feel free to email me.
Yeah, and just remember, Amar's going to get out of here to go get himself Korean barbecue because you haven't lived until you have Korean barbecue. All right, Mar, you're going to hop off. I'll see you. Stay here, guys, if you want. See you next time, brother. All right, so that's Amar. And again, I cannot come across like I'm endorsing him because the SEC had a rule you could do testimonies and endorsements, and apparently they've since got rid of that rule because Sniffy Joe is in cahoots with the CCP. All right, so we got right here. My brother and sister-in-law worked in assisted living as equipment. All right, they saw how things were when there was no tour. Yeah, it's well, he means avoid Medicaid. I'm sure. I'm sure he means avoid Medicaid. So basically what he's saying is when the bosses weren't there, it wasn't the best of help. And the sad thing is there's plenty of great people who are providing Medicaid services. Unfortunately, well, it's just like cops, freaking any group, military people, any group. 90% of the people are going to be righteous. There's always going to be some clowns. Any group, you're going to have some clowns. And the issue is a lot of times the clowns get all the knowledge and notoriety where the good people don't. It freaking sucks, man. And so there's lots of wonderful people in Medicaid facilities, but there are some clowns, man. There's no other way around that. But, there's some clowns in continuing care retirement communities. Frankly, Ms. Tweedy, so I tell you, I think where I would disagree with Amar is 57 to 63, man, by then it's doggone expensive. If you're getting a long-term care policy, I would look at it in your late 30s, early 40s. I'm just telling you, that's what I got it. I think I was 39. My wife is 35, or maybe I was 40, something like that. Remember, insurance is the cheapest when you don't need it because the insurance company says there's not a likely risk here for us, and we're just going to get those premiums for many, many years to come. And they're right. I've been paying it. I'm 50 now for at least 10 years for my long-term care. I pay, in fact, I can't remember, but let's just say $150 a month. That's for both Charlotte and me. I think between us might be a little bit less than that. Probably that now. Anyway, so they've got $18,000 from me over the last 10 years. All right. And they haven't had to pay out. And most likely they won't. But that's what the insurance is. It's like your homeowner's insurance. Well, you don't want to have to pay out, but you still pay for it. You don't want your house to burn down, but just in case you want to be covered, man. And it's one thing if so when I'm an empty nester, I disagree with Amar on, and again, this is what makes financial planning. So there's no science here. I cannot stress this. Amar looks at it different than I do, which is okay. It's okay. There's no science or right or wrong way to do things other than my way. But if literally Amara says, look, I want to make sure if you need it, we're going to have it planned for the budget. I said, I don't think you're going to need it. But we all have different ways to look at this. The reason I say I don't think you're going to need it, because I actually do think most people have a long-term care insurance policy, is called their house. It's literally an impossibility to domicile in a long-term care facility and your primary residence at the same time. You can't. It's an impossibility for you to live in both places at the same time. So it's going to be one or the other. And if you're going to go to assisted living, nursing home, skilled care facility, inherently you're going to sell your house to go there. So as such, if your house is worth $200,000, well, that's going to be probably the price of entry in terms of most assisted living long-term care facilities. And the funny thing is they're going to do some number crunching before they let you in, by the way. I'm just telling you, they're not going to take a bunch of freaking people who don't got a two pennies to rub together or nickels to rub together. So they're going to do their due diligence. And they're going to say, okay, yeah, you can afford it because we know we'll sell your house. And when you sell your house, we're going to put a lien on it. And as such, we'll get first dibs when the house is sold. It just inherently makes sense. So anyway, if you're going to get long-term care, the earlier, the better. And when it comes to life insurance, this is what I said in my book. I think everybody needs a term policy. If you're in your 20s and 30s, there's no reason not to get a 30-year term. But Josh, I don't care what the butt is. It's so flipping cheap. Why not get it? And what's going to happen is you're going to find at some point, I hear this all the time. I get AD&D, accidental death and dismemberment. That's not insurance, man. That's not life insurance. That's not. That's why it's so cheap, because there's no likelihood of you getting that paid out. Not very much likelihood of you getting term paid out either, which is why it's so cheap as well. But guess what? There are some segments of the population who die early. And as such, they're going to want to make sure their freaking significant others are not going to Pauperville, if that makes sense. What do you think? Is that okay? You okay with that? You okay? And so you spend freaking, $15-20 a month on a $500,000 term policy. What you're doing there, by the way, is you're locking in your ability to convert it later on when you're uninsurable, like my man Rich, who was in the Army, or Kim was talking about her son. So you might find later on down the road you have brain tumors and you can't be insured. Well, then you convert your term life to a permanent life insurance to make sure you carry something. So for $15, $20 a month for a $250,000, $500,000 policy, that's literally some of the cheapest insurance you can find. If you don't die, all right, you lost $240 a year. Wow, what to do? You know what I'm saying? I guarantee you're going to probably spend that over a weekend, half the time, just freaking drinking beers and smoking and joking. So you buy yourself some term life insurance, get it locked in, have it, make sure it's convertible. It can be converted to permanent life insurance in the future. That's just a simple, easy win without question. So in long-term care, it's kind of the same thing. It's going to be more expensive, I grant you, but at least you know you're covered. So that way, if something were to happen, you at the most inopportune time, i.e. you haven't built a net worth big enough yet to cover you. You have kids. You have a wife at home who's got a crappy old job, but she's only doing that for health insurance. And you're like, if I were to lose this job of doing YouTube stuff, she's gonna be in a world of hurt, man. You know what I'm saying? If I did not have long-term care and or life insurance. Now, remember, this is a conservative-minded channel, politically and financially. I want to be clear there. I'm not one of these guys buy term and invest the rest as if it's the only way to go. I'm not against that, but I'm open to arguments not to do that depending on the situation at hand. But this is a conservative channel. That means we take things within a conservative approach because that's the only way to do things, in my opinion. I think people who I was talking about, who was I talking to? I can't remember. Some guy a few days ago, or maybe he emailed, I can't remember. He's like, I've done this in my mutual funds. I forgot what it was. And I was like, I don't think you can bank on that going forward, dude. I said, look, if you do it, that's great. But I think you're way too aggressive on your expectations for the next 10 years. And again, if you get that, that's icing on the cake. But man, I just don't feel comfortable thinking that I forgot what he was. He had some fund that would, he was staying with that fund because it did so well. I forgot. But anyway, I don't want you to do that. Not here. You can do whatever you want, your own plan. But man alive, dudes, you've been around long enough like I have. You've seen, like I said in a video I did earlier today, God laughs at your plans. That's just a fact. God says, all right, Josh, you think so? Ha ha! Let me throw this Tuscaloosa freaking tornado through your neighborhood and see what your plans are to escape that. follow science, climate. Oh yeah, it's coming. It's freaking nuts. It's nuts, man. They're just these freaking people. The hard part is to see old people trying to take care of each other. Yeah, it is. I actually came across a guy. I was in Costco yesterday, wearing my mask. Had to wear my mask, so I had my 1984 mask on. And a guy was in a stroller, and he had canes, and he was trying to get toilet paper. And I know he struggled, so I said, "Here, let me get it for you." Anyways, I put it in, and we got to talking, and it's interesting because he had walked the whole AT, the Appalachian Trail from, I think he said, where did he go from? Where did he go? I think he said from Georgia through Maine. I think he did the whole thing or something like that when he retired. So here's a guy in canes, like, these walker things, walking sticks, in a stroller. But when he first retired, he walked the whole AT for like 6 months. Just sad, man. It's just, but he was a nice guy. He's still cognizantly there. But his wife came along and she was fine. She was fit as a fiddle. But I guarantee, just that's typical. He's going to go get worse and worse and worse. She's going to wipe his butt. She's going to take care of him, and then who's going to take care of her? That's typically the way it goes, man. Anyway, so going back to what somebody said about watching old people take care of themselves, yeah, it's not good. Let's see. Yeah, we're going to dive into a deep dive in long-term care because there's lots of different policies out there. Oops, sorry, buddy. Oops, I got 2 dogs right by my feet. You got long-term care hybrids, pure long-term care. I used to sell the hybrids back when it's called Money Guard through Lincoln. I freaking loved it then, and I still love it now. I do. It's not a pure life insurance. It's not a pure long-term care, but it gives you good benefits for either. Not great, but good. And if you have enough liquid cash, because I personally don't think most people are going to need long-term care. I just don't. And that's based not just on my gut feeling. It's based on real raw numbers, real data. And as such, I think a hybrid is probably the best way to cover that. If you're not going to, if you do need it, you won't spend that much money. Because the drawback of the hybrids, it doesn't cover the exact cost of your long-term care. Well, you know what does? A true long-term care policy. Well, does it really? Does it? And how much expensive does it cost? And like someone was saying, like Kevin McNitt, he said they could price you out as you get older. That's a fact. Yes, right here. Jill got it for 100%. That's absolutely the way to go. Get out when you're young. I'm telling you, don't wait till you're 57. The insurance companies aren't stupid. They're not stupid. They say, this guy's 57. Now he's inquiring about long-term care. Look, they do run you through underwriting. So they also know they can remove themselves from having to insure you if they feel like it, but don't wait till you're 57. Got my LTC at 59, detailed memory test. Yeah, right on. Seem like so a hybrid. So what happens in this case, I had these people retire from Merck up, and this is in Elkton, Virginia. And I love these guys. Just this one of the things I do miss about being a broker. I do it here too, but I did lots of seminars and go to people's houses. I enjoyed that to some degree. I enjoyed it a lot less than I do this, that's for sure. But it was, you go to people's houses and literally break bread and just become really great relationship with people. To the extent that you can't really do so much on Zoom. It's still good, but not quite the same. Anyway, so these guys, I remember we got, they had a bunch of liquid money, I think like $250,000 in cash. So we put $50,000 as what's called a drop in. So they both got a Lincoln Money Guard, and then we put $50,000. I think it was $50,000, and they had $166,000 of life insurance, $212,000 of long-term care, and then they had access to that $50,000 if they ever needed it, a guaranteed return of principal. Now they weren't making any income off that $50,000, if that makes sense. So basically, 5 years from now, if they were destitute, they could take that $50,000 back. They'd lose their insurance, but it was nice that they weren't locking in, like they'll never see that money again. So one of 3 things were going to happen. They're going to get the $50,000 back. Their heirs would get $166,000. I think it's $166,000. And then they get $212,000 in long-term care, which is pretty cool. So no matter what happened, they would get at least what they put in. Now there's an opportunity cost, I grant you, but still that was a good thing because we said, look, at the end of the day, you know for a fact you will get this money back. And that was good. Now, Lincoln isn't stupid. They're taking that money, investing it, right? So that's how it works. You're giving them $50,000. They're investing it. And by the time 20 years goes by at 7.5% or 7.2% rate of return, that $50,000 is worth $200,000. And then that time that guy was probably 85, and they probably say, yeah, okay, at the end of the day, we might have to pay $150,000 for long-term care for this guy, so we'll pocket the difference, if that makes sense. In my opinion, it's a way to go, just because you're solving the dilemma of what if you don't use it, and you're also solving the dilemma of future increases on premiums because you're locking in. You're paying one. It's just called a drop-in. It's a lump sum. I actually am a big fan first time. I care a lot. The old band Fear No More. Was it Fear No More? Before they came out with that stupid song that became a hit on MTV, they had an album called We Care a Lot. That was actually a pretty good punkish rock album. So crooked legal guardian drains the savings of her elderly wards. Yeah. Back years ago, there's no insurance. Grandma sat on the porch in the rocking chair. One day she doesn't wake up. Yeah, I 100%. I completely agree. And I sneaky suspicion we're going that way again. I'm under the life has been so good for so long. What is it that hard times make hard men make soft times, and soft times make hard times. Yeah, that's what it is. Hard times makes hard men make soft times, and soft times make soft men. Something like that. But it's the circle of life. When you're living too large, someone Finnegan, jeez Louise, man, we're eating burritos. Dang, that just stinks. Dog Fart, there's another, speaking about punk rock, there's an old song called Dog Fart by a band out of Canada. The Dayglow Abortions, Dog Fart. It's pretty good song. That's from mid 80s punk rock. Anyway, the point is the circle of life, essentially, that we're living. So check this out. And I'm going to get out of here because stinky butt over here, I'm sure he's got to go poopy. Let's just, I vacillate between my hope for the younger generation and not. Let's just put it this way. I heard a story the other day that a lady couldn't go to work, a young lady, an intern, because the doctor's office hadn't given her prescription pills. And without those prescription pills, she couldn't function, and they weren't going to fill the packet until Thursday, and it was only Monday, so she couldn't work until her prescription drugs are filled. And she goes to a pretty uppity college. I sat there and I say, that's kind of frightening that I can't go to work until I get my pills. That's not good. And the sad thing is that she wasn't hesitant to tell that to her boss. And I said, that leaves me to have pause on my initial optimism about the younger folks. So I don't know what to make of that. Now she's in college. So I'm starting to think that college is going to give you the mark of the beast, essentially, at some point, that people who actually go to college that's going to deem them not worthy of getting a full-time gig, because at some point, because the colleges aren't requiring anything, at some point you got to realize the stupidity of going to college and taking on all this debt in order to get a $30,000 a year starter job. I do believe at some point we're going to look at people with an undergrad and say, yeah, that was dumb. At least an undergrad in humanities, and it's sad because I do think philosophy has a lot of good stuff, economics. But at some point, and I think it's sooner rather than later, we're going to recognize college is basically for little Eichmanns and morons. No other way around that. I think we're almost there, frankly. You hear what's going on at Smith College, that place up in, I think it's Massachusetts or Rhode Island or something like that. Some lady who is privileged as all can be, she was in some place where no one was supposed to be, and a janitor who was told, if you find people in this area because it's closed off for summer, let us know so we can tell them they're not supposed to be here. And the janitor, who was just a working stiff, told the police people, the security guard essentially, who aren't armed at this college, and the security guard went up to her and said, hey, you're not supposed to be here, blah, blah, blah. And very friendly, not confrontational at all. They don't carry firearms. And the lady and the security guard was polite as can be to this woman. And this woman was polite back. And then she realized there's an SJW way she could make this, eating lunch while a certain color of skin. And long story short, she got the janitor and somebody else essentially freaking, thrown up against the wall, like the Salem witch trial. And the janitor is just some working class dude, white guy. And the woman who was also part of who somehow another woman got accused of being part of this, who wasn't even there. And they all got just destroyed by the mob on Twitter. And so the privilege was in one direction only. The rich elitist who get to have privilege that they were eating lunch while a certain skin color, and the two janitor people who are making $30,000, $40,000 a year, which is basically half the total cost to go to Smith College, all had their lives put upside down. And now this woman is at Columbia University in a thing on anti-racist studies in a graduate program. So nothing happens to her. She gets the privilege, man. Rolls out the red carpet. You're privileged. Why is she privileged? Well, you can figure that out. And the janitor and this other lady are left to freaking, the whole thing's freaking evil. It's evil. It's just pure evil. No other way around that. And as such, I think at some point we're going to have to say, you actually went to college in that field. There's no way I can hire you because you're just a moron. I mean, literally, it's moronic. And on top of that, we know you're a little Eichmann too, and we don't need little Eichmanns running around. Anyway, I guess I'll close on that. I haven't been as infuriated about the white privilege crap as this right here, because it ain't true. There's a privilege, but it's not for working class whites. I'll tell you that right now. Now, there's definitely some class privilege, and a lot of the people who carry that privilege happen to be white. I grant you. But it's no white privilege, and anyone kiss my butt who says there is. Just don't subscribe, because I don't hold to that at all. And I think for you to say there's white privilege inherently puts you as a racist. And I don't want racists on the channel, because racism is not what Jesus would ask us to do. But we got to call out privilege when it's out there, regardless of who it is that's receiving the privilege. And this is just some evil stuff, man. I'm actually going to interview my man Aiden from Turtle Boy Sports on Monday. And Aiden, he just kicks butt and takes names. Love this guy. He doesn't hold back. It's awesome. Not afraid, which I don't know how he does it, frankly. I don't know how he does it, but he's up in Massachusetts, and he kind of broke this story or stories along this line. And the only reason he was able to get do this, because he's the only one who's got the guts to report on what is inherently obvious to anyone who can think for themselves, that there is no such thing as white privilege. It's class privilege. It has nothing to do with race, but it's class. If you are a certain class, you get privilege. If you are of a certain race, you don't get privilege if you're of that other class. So if you're a working class, you don't get privilege. And I'd even throw in, if you're of a certain class too, and you're accused, even if you're black and you're of the lower class, you're accused by a privileged white person, even that lower class black person will be on the outside looking in, where the upper class, the Lena Dunhams of the world, the social justice warriors at various colleges, especially these rich elite college. If you're a basketball player for a university, let's just say, and a rich white girl accuses you of doing something inappropriate, they're going to always go for the rich white girl. We know that for a fact. And the poor black kid will be left out of the cold. We know that for a fact. So it's class. It's class, man. It'd be nice if the Republicans would once in a while engage in a war to say, and it's not literal, but it's a war to say we are here to defend the vast majority of the voters against this class privilege, because it's out there. But the Republicans, it's the thing, man. They don't want to engage in it because they're kind of part of it, right? Once you get to DC, now I do like Marjorie Taylor Greene, MTG. Yeah, I like what she does. Yeah, I literally could care less about. I don't care. So I'm surprised. I just don't care. I like the fact she stands up to him. I love it. I love it. I love it. I love it. So some clown next to her said, "Oh my goodness, my son's this, and now he's a woman." Blah blah blah. And she goes, "That's fine, but he or she should not be going into the bathroom of my daughters." It's just that simple. And of course, the left said, "Oh, you're racist, not racist. You're a transphobe." She, well, you can call me whatever you want. I don't care. But I'll make the argument that a boy should not be going, even if the boy identifies as a girl. We're not freaking put them up against the wall, but that person should not be going into the bathroom of children who are girls. That's not the way it's supposed to be. And so she has the guts to fight back. I love it. I'm so excited about these guys who got the guts to fight back, because it's about damn time, pardon my French. And I hope we see more of it. I think we're gonna. I hope we shall see. We shall see. We shall see what kind of fighters we got in 2022. It was very comforting to hear Trump say he's not going third party. Like, I don't want Trump to run again. I mean, if he does, I'll support it, but I don't want him to. But whatever. But I don't want him to. But I like the idea. He's saying, why should I start a third party when my ideas are in control of this party, the Republican Party? It's a Trump party now. So I like the idea of that. So that kind of made me revisit my idea of leaving the Republican Party, because at this stage, there is no place to go. And you're not going to start a third party from the grassroots unless someone like Trump does it. And we even saw what happened with the Reform Party fizzled out. And the same thing will most likely happen with a third party challenging the Republican Party. But I won't vote for them if they put up, idiots like Mitt Romney or John McCain or John, what's his name, Kasich. I'll work against them adamantly. But anyway, I do have worries about this younger folks, but I think it's more about the ones who go to college as opposed to the ones who just work, if that makes sense. So, all right, my friends, we'll stay tuned. Oh boy, let's block user. We'll stay tuned because my man Turtle Boy is knee deep in this stuff, and I think he says he has. He's being sued 12 times. He's got 12 or something. There's numerous lawsuits against him for calling out the leftists. It's awesome. So go to tbdaily.com. Let's just bring it up here real quick while I'm thinking about it. Just while I'm yapping, let's go to Turtle Boy, TB Daily News. Now, this isn't for the faint of heart. So if you're like, oh, I'm so offended, don't go to TB Daily News, because he does cuss. He does talk smack. But I love it. I just like people standing up. So what we're going to have is we're going to have all kinds of I want to show you this one thing right here. We let's see. We got hold on a second. Right here. So here's Mansfield's Teachers Union president complaining about going back to school, but he's been going out for months, wants roller skate rinks open. So he calls these people out, man. Right here. Leicester High School Foreign Language Department head appears heavily drunk during school committee. Okay, that was fine. But I want to show you the one that really freaking ticked me off. Let's see. Boston BLM activist teacher, she's a teacher, arrested on gun charges while driving with career criminal on suspended license. Right here. Is this it? MTA president claims picture of her. Yeah, right here. This is fantastic. So here you got the Massachusetts Teachers Association president claims picture of her cutting the line to get vaccine was photoshopped. He's put the pressure on these people, man. And here's the lady right there who's now who faked tears, who's now at Columbia after getting people resign. Let's see. All right, this one's funny, man. Boston Globe, city officials come after West Roxbury restaurant after activists share photos of people eating. Oh my goodness, they're eating. This is actually pretty funny. That's when I posted a part. This is the lady who said, I can't believe I went out for 10 minutes at the Shop and Save. I have 2 face masks and I don't know what to do. It's great. So I love it. So there's all kinds of stuff on TB Daily News. And he's right out of Boston or Worcester. And if you're not following him, you need to be, man. So all stuff, my friends. We will for the love of the good Lord. Scott, I'm not on WhatsApp, man. You did not do that, did you? No, I am not on WhatsApp. Whoever's doing that is fake. It's not me. I'm not on WhatsApp. Get off WhatsApp, or at least don't. I'm not on WhatsApp. Whatever the hell it is, I don't know what it is. So don't do it. I'm not there. And please don't give money to WhatsApp people, because that ain't me, man. Let's just hide some users right here. I like hiding users. All right, I guess that's it. Yeah, me too. I 100%. I hope that guy sues them for all they're worth. Go after the foundations. That's how it makes it hurt. How do you think the left got so freaking powerful? They went after the moneyed interests. You got to go after the moneyed. That's why I said when Trump started taxing the foundations of these universities, that was a step in the right direction, but he should have went hard. He should have said, if you're not giving away more than 5%, and you got students coming out of college with massive amounts of debt, we're going to tax you. You got to play the game. Freaking play the game that they've given us, the Saul Alinsky model. Use rules for radicals to beat them at their own game. That's what Saul Alinsky was saying in the 60s. Now, I can't stand the clown, but it's freaking, that is the roadmap for freaking freeing us from the social justice wokesters. Make it hurt for them, not literally, metaphorically. Hurt. Make them have to defend their insanity. So you say, like TB Daily News, my man Aiden, you say, hey, look, you can't just call janitors freaking racist just because someone said do what they're supposed to do, which is if you're in the wrong part of a campus that's closed down for the summer, you're not supposed to be there. And just like they're told to do, they call the peace officers, whatever it is, and you get them fired while you're going off to Columbia. Guarantee that she's not paying a damn thing for that because she's got the privilege, man. And the janitor who's got lupus or some kind of issues, health issue, he can't see very well. He's an old man. Screw all that. You got to fight back. Use their rules against them. That's the best way to do this. And that's why someone said, Josh, we need to be, what do you say? But so now, Josh, you're accepting cancel culture. No, I'm not accepting it. But it's here. It's like I'm not accepting freaking mask mandates and all this crap, but it's here. So we're just going to sit back and say, I'm not accepting it. Okay. Well, I don't care what you accept. It's here. So you got to fight back and use the things that they're putting on us. Why? This is what Republicans always do. We tie one hand behind our back because we want to be logical. We don't want to be unreasonable as the left is marching through and through the military now. Have you seen what the Secretary of Defense is saying now? Essentially, basically, if you're an extremist is defined by Joe Biden and his clowns, then we basically want to weed you out. It's like, where have we heard that for you? Erdogan in Turkey, that's his military. Anyone who didn't support Erdogan's out. Venezuela with Chavez, you didn't support Chavez, you're out. It's the same thing they're doing here, man. So now you're going to have the military. The same thing happened in the UK. You should follow what happened with police in the UK and how when the SJWs took over, the police in the UK are not, it's not a good group of people, man. It's just not. Because I followed the UK, I followed Canada, Ireland, and it's not good. And you'll see what happens when you don't fight against the SJWs. Because what happens, as John O'Sullivan said, who used to be the editor of National Review, or maybe the publisher, one of those two, the editor at large, any organization that isn't explicitly right-wing will become left-wing over time. Reason Magazine is left-wing now. Used to be libertarian. Now they're just anti-populism, right-wing populism. They're not anti-woke. I'm telling you right now. There's some guys in there. A lot of them are not. Reason Magazine. National Review is going full left-wing. It's nuts. National Review can kiss my ass. I'm sick of National Review. They're just nuts. And there's some Forbes Magazine. Popular Mechanics. Oh, my goodness. Popular Mechanics. I got rid of my subscription 2 years ago. I said I can't take it anymore. Forbes Magazine. Blatantly left-wing. It's all propaganda. Any organization that isn't explicitly right-wing becomes left over time, which means the minute the SJWs get that nose right there, and Pablo is not an SJW, are you? So the minute they get their nose in there, you got to freaking knock it out. You can't have it. Hillsdale College, Grove City College, probably the only two universities left in that I can think of. Maybe this Lee University up in there, Cleveland, Tennessee. But I know Hillsdale and Grove City are still righteous. I don't know any others, though. That's for sure. All right. That's weird, right? Sniffy Joe. It's kind of creepy. There's no State of the Union. And when he talks, it's weird. That actually frightens me. I was talking to a guy last night. I said, I wasn't really all that frightened by Sniffy Joe. Now I kind of am, because he's obviously not. Somebody is running. It's not freaking what's her name, Kamala, because she's dumb as a rock. Sniffy Joe is dumb as a rock, even when he had his capacity. And Joe Biden's dumb as a rock. So we got 3 dumb as a rock people in charge so they're not running this stuff. Who is running it? At least with Obama, we knew it was Valerie Jarrett. We knew who the person was fighting for the left-wing craziness. But who is it with Sniffy Joe? I don't know. It's kind of frightening, man. So, how to fight back? Well, this is the point. It's the culture, Kim. You got to fight back on the culture. This is what I'm saying. Elections worked. No, the Republicans were in charge more than the Democrats were since Reagan was in office. And look where we are. It's the culture. Remember, Andrew Breitbart. Politics is downstream from culture. You win the culture first and the politics comes next. You don't win the politics first and change the culture. You got to win the culture. And that means you got to freaking make it hurt for these people to be SJWs. Again, you don't have to go freaking up to somebody who's eating at a restaurant, mind his own business, say, Black Lives Matter, whatever the hell they were doing. We don't do that crap. And I think there's somebody in California or something like that. They went to a vaccine place where people get their vaccine. I guess they protested in a way to make it so people couldn't get vaccinated. No, we don't want that. If people want to get the vaccine, I don't care. If people want to get the vaccine, I don't hold anyone. I'm not saying that's stupid. I don't care. You want to get the vaccine, more power to you. My body, my choice. I got no qualm with it. You do whatever you want for you. I don't care. But you don't want to disrupt people's daily living, but you want to embarrass them. You want to hold them accountable. That's why you got to support people like my man Aiden over at friggin' Turtle Boy, because they won't advertise. He's been banned off Facebook more times than you and I can we can sneeze and we got big allergies here. The Twitter, but he keeps coming back. They won't let him they won't have any advertisements on his website because they keep going after his advertisers. Aiden he has depression. He's been outright acknowledging he fights depression, and he had a guy on there from the suicide prevention thing, and they went after the guy from suicide prevention because he was on Turtle Boy Sports. So you gotta support these people financially, because if you don't, we're just allowing YouTube and these other groups, dictate the information you get. It's not good. It's not good. So anyway, no, 100%, 100%. They don't like Trump because he fought back. That's exactly right. They don't, 100%. All right, let me get these dogs out of here because they stink, man. We'll see you guys later. Appreciate you being here, and we'll be doing more live streams later. I just off the top of my head, I can't remember what my schedule has been busy as a bee in a bonnet. Thanks again. We'll see you.